End of the year tax prep tips. That's what we're going to be talking about today on Elements in Focus. If you're new to Elements in Focus, this is where we break down every week one of our 5 critical elements. Today, I've got Grant Thompson, our certified financial planner, one of them in our Anderson office, and Grant's going to be covering tax planning. So, as I mentioned, if you're watching this for the first time, we go through our 5 critical elements every week and give you things to think about. So, Grant, I'm going to turn it over to you. What are some things our families and future families can plan for before the clock strikes midnight on December 31st of this year?
Absolutely. Thanks, Aaron. Yeah, so this is a topic that we cover a lot, obviously. I would say that this is probably our bread and butter. I mean, this is something that we really take seriously. It's something that we work hard toward with our families. The first thing is, what is tax planning, and how is that any different than reporting? I think a lot of times we can get that confused. Tax planning is really what you do that entire year leading up to reporting. So obviously, you'll file in most of you, it'll be April of the following year, but we have 12 months there to plan for what that tax return is going to look like. So the first thing that's on a lot of people's minds, how does the One Big Beautiful Bill Act affect me? And so the two major things, the way that it affects our families, number one, you're going to see that the tax rates that we have previously had are going to stay the same. So that was something that we were looking to. As of until that bill passed, the tax brackets were set to go up. And so if you were in the 12, you were going to go up to 15%, 22 to 25, 24 to 28, and then on up the ladder. So that's going to stay the same. And so whatever tax bracket that you were in last year, you're most likely going to be in that tax bracket again this year, barring any changes. The next thing is, a lot of people have been asking me, well, I heard that my Social Security is not going to be taxed. Is that true? That's not true. But there is something that that bill did, and that is going to give you what we call an extra added senior deduction. So if you were over the age of 65 or older, you get a $6,000 deduction. So if you're married filing jointly, that's obviously $12,000. Now there's phase outs. So if your adjusted gross income is going to be over 150, it starts to phase out. And so not everyone is going to be able to use that, but a lot of our families have been able to, if we can keep their adjusted gross income down. So those are the two major things. And then as far as what does tax planning look like? So for us, a lot of that is going to be year-end Roth conversions. So again, we go back to the tax brackets. If you're married to a tax bracket, that just means you can't really do anything to get out of that. We're going to utilize Roth conversions. We're going to look at qualified charitable distributions. And so that's sending money out of a tax deferred account to a church or charity. That's tax free to you and the church or charity. And then one of the other things that we're going to look at that oftentimes gets overlooked, can you gift any appreciated stock out of a trust or a brokerage account? In down market years, can you do any tax loss harvesting? Can you claim those losses and then report those on a tax return? And then finally, the last thing that we're going to look at really is if you have not satisfied your required minimum distribution, we're going to look at satisfying that in the most efficient way possible for you. So as far as the tax planning goes, I can't stress enough that it really is a 12-month process. We don't want to wait till the last minute. And we obviously can't wait till 2026 because we can't make any changes at that point. So I would encourage you to look at your situation, see if you can be more efficient with how you're planning for that year. And Aaron, is there anything that you would add to that on your end?
Just a couple things that just need to be done prior to the end of the year would be if you're making HSA contributions to health savings accounts, make sure those are funded before the end of the year, as well as 529 plan contributions. So here in the state of Indiana, you get a 20% tax credit on up to a $7,500 contribution to a 529 plan. And then one other point of clarification on the QCDs, you do have to be age 70 and a half or older Our RMD age, required minimum distribution age, is 73, but you can do a QCD at age 70.5, and we help a lot of folks do those. You do not get a tax deduction, but if you do a QCD, it's not included as income and in hopes of lowering your future required minimum distribution. So, Grant, well done in covering those types of tax planning strategies. One other note to mention as I'm just thinking through things, July 4th was when the One Big Beautiful Bill Act was signed into, law. And upon that signing, it actually increased our standard deduction. So this year, the standard deductions started out at $30,000. As of July 4th, it is now $31,500 for a married filing jointly couple. And as Grant mentioned, there is an extra $6,000 deduction for those older than 65. It does open opportunities to do potentially a little bit more Roth conversions. That does set to expire in 2029. So that extra senior deduction of 6,000 per person will set to go away at the end of 2028. Nothing more to add outside of that, Grant. Anything else you want to wrap up with?
No, again, I want to stress that this is something that you want to do each and every year. And then you want to look at your situation because every year it might be different. And so just making sure that you have everything nailed down is very, very important.
If you want more information or you want just a review of where you're at along your life after work, or even if you're looking for a different guide to make sure that your financial journey is going down the right path, FEG is here for you. Give us a call, 800-928-4001. You can request a complimentary next steps meeting at yourlifeafterwork.com. There's a contact us section. You can fill that in. One of the advisors on our team will give you a call, reach out, ask you a few questions to make sure that we have a good understanding of what you're wanting to accomplish in that next steps meeting. During that next steps meeting, it's a 90-minute meeting where we'll consult with you and we'll have a collaborative talk about your situation, your specific situation. We'll give you things to think about today, things to think about in the future, and if we decide to partner together, a written plan for what FEG will do for you and your family. Thank you so much for watching. We really appreciate the work we can do for our current families and absolutely appreciate any future families that we can take care of. Have a blessed day, and thank you so much again for watching.